semana que viene, mirando sobre todo a la Reserva Federal. Bien, pues hablamos con Victoria Fernandez, es Chief Market Strategist en Crossmark Global Investments. Victoria, thank you so much for having us a few minutes. A pleasure.
My pleasure.
Victoria, we are expecting next week the decision from the Federal Reserve. We are waiting for this last meeting of the year. On Wednesday, we will know the interest rate decision. What can we expect from its president, from Jerome Powell?
Well, I think we're going to get a 50 basis point rate hike at this meeting next week. It's what the markets have priced in. I think it's what people are expecting. It's a little bit of a step down from the last few hikes where we've been getting 75 basis point hikes from the Federal Reserve. So it represents a little bit of a slowing that comes in response to inflation starting to come down a little bit in the US. Today we had a PPI report that was a little bit higher than expected, so there may be a little volatility in the markets until we get that meeting from Powell, especially since the day before the meeting on Tuesday is the highly anticipated CPI inflation report. So that will definitely feed in to the information that we hear from Powell, if not on the decision itself, definitely in the press conference afterwards.
And Victoria, this year 2022, it has been a difficult year for equity markets, for fixed income. What are your expectations now for next year, and which is the taste that this year leaves to us?
Yeah, so you're right. 2022 has been a pretty difficult year. The last 3 quarters is the first time in 50 years that we've had both the equity market and the fixed income market with negative returns. So definitely something that hasn't happened in quite a while. I don't think 2023 is going to be a lot better than 2022, because I do think we'll probably see a small recession in the United States. We'll probably see some forms of recession around the globe as well, as the energy issues continue to work their way through, higher wages work their way through the economy. There's a lot of struggles that we have to go through, and a lot of geopolitical issues that are out there as well that can cause some volatility. So I think we'll be struggling a little bit as we go through the first half of next year. And then for the end of 2023, I think is when we'll start to actually be working through those items, start to gain our ground a little bit. And then I think 2024 will be a much more positive year than either 22 or 23.
And Victoria, one of the uncertainties that we have now, well, it's not just an uncertainty, we can say it's a certainty now. It's the recession in the US, in Europe. We are expecting how deep could be this recession. Are you betting on a shallow recession or a most deepened?
I actually think we're going to see more of a shallow recession. A lot of that coming from the United States and the strength of the consumer. They've really held up a lot of the stimulus payments that came through during COVID, a lot of the policies that were put in place to support people during COVID over the last couple of years. There's still some remnants of that with the consumer, allowing them to spend. And we are in the holiday season, so there's a lot of seasonality that comes through that is stronger for the consumer. So I think that's going to help us have maybe more of a shallow recession next year, especially with earnings we need to watch. If earnings come in much worse than anticipated for this quarter and next quarter, that could change, and that's actually going to be the big unknown, is whether it's a deep recession or shallow. But we're actually looking for more of a shallow recession, work our way through that, and then have the economy start to rebound again towards the end of next year.
And Victoria, what can we expect from corporate earnings in this new earnings season?
You know, it's interesting. We actually thought earnings were going to take a pretty severe hit earlier this year, and they didn't. They've hung in there pretty well. But we're seeing expectations come down, actually coming down more than double what you typically see for expectations this quarter. So I think we're going to see pricing power go away a little bit as we go into the new year. That means margins are going to be compressed a little bit. And I think people are going to struggle as consumers become a little more more picky on what they're allowed to pay up for, what they're willing to pay up for. So earnings is going to be a key component as we head into 2023. And again, I think that will drive a lot of whether we have a shallow or a deep recession.
And considering all this, well, markets outlook, which are your principal or main investment opportunities? Where do you put the focus on now?
Yeah, so I think for our clients, we keep talking to them about really having a balanced portfolio. So because we think there's going to be a recession and because we think there's going to be volatility in the markets, you want some more defensive names in your portfolio. So we like healthcare names, things like Elevance Health or Cigna. We also like to have a little bit of what we call cyclical names, some exposure to the market, because we can have little rallies in the market and we want to be able to take advantage of that. So for us, some of the cyclical areas, we're looking at names like Home Depot or Lowe's. We like those areas. You can add a little bit of exposure on the retail side with a name like a TJX as well. But you have to do your homework and make sure you're getting companies that have strong balance sheets so they can withstand some volatility.
Victoria Fernandez, thank you so much. It's been a pleasure.
Thank you.
Bueno, pues nos quedamos por tanto con ese análisis. Como decimos, nos está dibujando ahora mismo